Every day on Wall Street, billions of dollars move through complex deals you never hear about. Deals that are fueled by months of preparation, meticulous analysis, and a document most people have never seen, a pitch book. If you've ever wondered what investment bankers actually do, what it really takes to broker a multi-billion-dollar merger, or why so much power is in the hands of these analysts fresh out of school, this is the blueprint, the real work that starts in late nights and ends in boardrooms. Within investment banking, the Mergers and Acquisitions Group is in the business of giving financial advice to management teams. What are the strategic alternatives? In other words, what are my options? Do I sell my firm? How much is it worth? Who are the potential buyers? And on the flip side, if an investment bank is advising a firm to potentially buy another company, the bankers will present potential acquisition targets. After all, M&A bankers are paid to do deals. As an analyst, though, life may not be as glamorous. No one ever explains what analysts actually do. Everyone talks about how the job is dynamic, the deals, and how every day is different. But what do you actually do when you're an investment banking analyst and you sit at a desk for those long hours? In the next few minutes, I'll show you what goes into these presentations, the role you'll play, and how they impact major decisions. Think you're ready? Let's get into it. Imagine for a moment that instead of a financial education platform, Wall Street Smart is an investment bank, meeting with a made-up technology company called CloudStream. Based on this table of contents and these sections, which would you say is the most important? At the most junior level, most juniors would say valuation because that's where you get to learn the technical skills of the job. But for a managing director, it's most likely the qualification section. This is like the resume section for an investment bank. It's where you pitch that your bank has the best suited credentials for your client's needs.
I'm flexing, I'm flexing, I'm flexing, I'm flexing, I'm flexing.
And the one that should be hired. First part of the qualification section. This is the team page. It's the page that is generally very stacked with senior level investment bankers and multiple product and industry group bankers to show a comprehensive and dedicated team to support the client. First off, let's just take a second to appreciate how attractive this deal team is. Note that in real life, you're probably never going to see interns and analysts ever make the team page. And there's several reasons for this. The goal of this page is to show a lot of senior leadership support. Analysts generally turn over every 2 to 3 years, if not sooner sometimes, and interns are obviously only there for a few months. Also, note that all the photos on this team page are professional photos. These analyst and associate photos probably wouldn't cut it. Anyways, the most senior leadership are usually focused on the biggest and most important clients and aren't on all team pages. Sometimes senior leadership will have a page dedicated to each banker. Other product group MDs are also usually featured if relevant. For example, the head of equity capital markets or debt capital markets or leverage finance. After showing your dedicated team of bankers in your qualification section, you show your track record. You show how you are the most qualified investment bank for your client.
Because I am better.
At what?
Everything.
So how do you win deals if there's only one number one investment bank? Why doesn't the top bank get all the deals? There's several reasons for this. For one investment bank can't possibly be on every deal in the market as much as they would like to. Two, the better reason, conflict of interest. The easiest example, you probably can't advise the buyer and the seller in a transaction, even though you have enough deal teams and different deal teams within an investment bank that may be available to work on the transaction. And three, personal relationships. Having an equity stake in a client, advising competing bidders are other examples of potential conflicts of interest. Lastly, the most interesting thing about this page is that many investment banks can all be number one. You just need a lot of footnotes. On this slide, you have the dates 2020 through 2025. For example, you could change that to be a trailing 7 years of recent performance, or maybe just the last 12 months if you've gone on a big deal. Announced transactions versus closed transactions are different because timing might affect your placement suddenly. Also, you might focus on the total number of deals if you're a smaller boutique or a middle market rather than total deal volume. Finally, on the bottom left are what's called tombstones. They're announced deals that are relevant to the client industry and/or type of deal that they're looking to do. This is a very basic page that you'll see in many different companies in terms of investment banks and their pitch books. The goal is to show how you cater to your client's need.
You smart. You very smart. We the best. You a genius.
And obviously, you have the client logo in the middle. The tombstone page. This page is to wow your client and to show them how much experience that you have as an investment bank, much like a resume. Here's an example of all the relevant deals done, whether that deal is in a certain sector or certain product. Tombstones may be organized by product, for example, mergers and acquisitions under one heading and IPOs under another heading. After the credentials section, generally, there's a sector and company overview section. As an investment banking analyst, you might not even have to do some of the market overview pages.
Nice.
It could come from equity capital markets and debt capital markets teams. Here's an example of a company-specific considerations page. This slide format is very common in banking, with headers and themes on the left and explanations on the right. As an investment banking analyst, you'll be making all kinds of fun charts.
That's boring. You're boring everybody. Quit boring everyone.
Here's an example of an industry peers pricing chart, some of which might actually frustrate you. And this is one reason why analysts may have to stay up late. Most of the book will be updated for pricing that is very near the actual meeting date, especially if there's any recent key market events. Analysts, though, will get good at streamlining and optimizing this process over time. Other reasons, such as formatting and tying numbers, will take time to complete. Valuation. Now, this is probably the section where analysts learn the most technical and transferable skills. It may only be 1 to 3 pages of model outputs in a pitch book that may be 20 to 100 pages long in total. But this could be where you spend the most of your time in terms of working and doing the technical calculations. Here, for example, is a very simple discounted cash flow valuation output. Note that each investment bank might have a different format, color scheme to match their bank branding or output sections. Here in this example, we have the most relevant line items such as revenue, EBITDA, and unlevered free cash flow. What's missing is the sum of unlevered free cash flows and the derivation of equity value and price per share. The bottom half is the sensitivity table, basically saying that if we change some of the inputs such as our terminal growth rate or WACC, how does this affect the enterprise value, the equity value, and price per share? Trading comps. This page is essentially a comparison of how expensive or cheap your client's business is relative to peers. It's interesting due to the peer set that's used. The peer set is subjectively defined by the bankers until later on, and if engaged by the client, most of the times they'll tell the bankers who they want as a peer set. The good news for analysts is that this work for this page is mostly automated. Data is populated and updated in an Excel sheet through add-ins from FactSet, CapIQ, SNL, and/or Bloomberg. They're third-party data sources. Transaction comps page. This page tracks all the relevant deals that are announced in a particular sector. It gives you an idea of how cheap or expensive deals have become over time. It lets you know, if public, how much was paid and the premium to the current market value. Most of the work here for the analyst is to try to find all the publicly available information for the deal to understand how much was truly paid for a particular company within a sector. Company profiles. This might be the bane of an analyst's existence.
Why are you crying?
Bankers will likely show clients potential acquisition targets. It allows for a discussion of competitors and potential synergies if the client were to acquire these target companies. So it's an important section. After all, bankers are paid to do deals, so they want to present the right opportunities. Your job as an analyst is to profile these companies. I have seen books that are over 100 pages and are nothing but profiles. Don't worry though, you won't have to do all the profiles, as the profiles are cumulative, as in, once it's complete in one client presentation, obviously prepared by a different analyst of course, you can take those pages and add it to your presentation. In these 2 pages right here, these are called strip profiles, which are very short bullet point profiles of potential target companies. For those companies that are targeted or are more relevant, a deeper dive into each company may be required by your senior bankers. Those are full profiles, where each company is profiled and can be anywhere from 1 to 3 slides. Company logos are usually in the top right with a breakdown of the business that ensues. Here, I have 1-pagers for 2 made-up companies. Next steps. The idea is to keep your client engaged by providing useful information and keep the conversation going. The next steps is the final section to say, hey, let's keep talking and let's talk about what your opportunities are and where we should go for our next conversation. After all, if your client isn't engaged in discussions with you, say at least once a month or so, then they forget about you as an investment banker.
No, please, no.
This is the page that is generally written by a senior investment banker. They're more responsible for a conclusion slide or a company-specific consideration. And finally, you have this very classic disclaimer page. It's usually auto-generated with macros in PowerPoint, but they have different disclaimers depending on the different type of investment banking pitch book that you're putting together. And there you have it, the real work for an investment banking analyst. So to sum it up, pitch books are the backbone of an analyst's work in investment banking, where you'll become proficient in PowerPoint and Excel over your analyst years.